All right, hello, hello, hello. Sorry about that. Um, Let me know if you can hear me okay. Looks like it's moving all right. Sorry, I was getting some lag. I was trying to figure out if something was downloading or something. Um, it was like pretty bad lag. I was like, I don't know what the heck is going on right now. Um, wasn't able to figure out what it was though. So I don't know. Wish I had an answer for you, but I don't. Anyway, no, Brian, 50 pip chips for everyone in the chat. So you can't hear me? No, no. um, yeah, no, you'll get some, maybe some holiday chips, right? Maybe we do some holiday chips for you, you know, right? Holiday chips, those are the thing, right? It's like holiday pies, right? Holiday chips. So, all right, it's Wednesday. It's going to be a weird day today. Just saying right away. But we got some good moves. There is some headlines and natural gas. Great move in natural gas. Oil. Great move in oil as well. Some of the things that we had talked about in the last 24 hours. You can see the pound obviously continuing with that strength. We mentioned it yesterday that we expected to see some pound strength. We expected to see some European weakness versus the dollar. Obviously, it's not there yet. And I'm wondering a lot of this if this is kind of the precursor to anything that the FOMC notes say today. It could, maybe. The data today actually justifies more of a stronger dollar. So, again, the weakness is kind of interesting. And I kind of get why. I don't know. It's weird. The weaker dollar, everybody's taking that, and the indices are, obviously popping off of it. But if you look at the actual, it's kind of weird. I don't want to say ironic because ironic is the wrong word for it, but it's almost like an oxymoron. What we're seeing, but with the data shows, and it's the whole like, is good bad? Well, yes, kind of, right? Good is bad and bad is good, and but the way that it's kind of being played is, it's very interesting, right? Very interesting. So. Pound is obviously the biggest mover. You see Euro pound is down 18, pound yen up 88. But for the most part, the rest of it is just dollar weakness, right? Minus 56, minus 39, minus 9. Really, that's nothing, right? Aussie up 45. So again, nothing big. In the overnight, as we mentioned, the original forecast was 50.6 in that flash services. And we said, hey, listen, not going to be surprised if it's below. And it was. It actually shows that there is a contraction, and that's probably why we're seeing a little bit of that European weakness. But yeah, that was like kind of the last straw. So we were right on that one. All the rest of them were good, though. So they were better than expected. And again, better contraction, I guess, is what that really is. Doesn't mean that their problems are fixed, that the economies are expanding. Closer, right? Closer. I mean, 44.9 is what the expectation was. It came in at 46. So technically that would be considered positive. But remember, it's not, it's not a sliding spectrum. It doesn't work like that. It's more, it's more aligned to, above 50, below 50. It's like pass fail, right? I don't know if you guys remember pass fail in school, right? It's more like a pass fail. It's not like a graded, 46 doesn't tell you much more than 44, right? It's, yes, contracting or expanding. So that was good. And then we get to the 8:30 data that just came out a little while ago. And this is where it's kind of like good is bad and bad is good, right? So this leads us into some of the articles today. Durable goods blew it out of the water. That's awesome, right? I mean, that's going to make, profits good for companies. People are still spending. But remember, it was people spending is what we wanted to slow down. So the fact that people are not slowing down the spending is kind of like, they're not slowing down yet. If they're not slowing down, it's not affecting the buyer, then why not just continue the path to crush inflation? Because we know inflation is still too high. Everybody keeps saying it. But the unemployment claims was just slightly higher, okay? And we knew that. I mean, we had, Amazon and some of the big brands out there, even Disney, talking about, some of the layoffs that they were going to do or doing, right? So that's not necessarily surprising, but I think the core sales data is. And again, if, everybody talked about how the unemployment rate needs to go up. Needs to do its thing. So in about 3 minutes, we are going to get the data for... what's it called? Flash services in the United States, right? And I think that'll be that'll be an important one to get, just to kind of see where we stand with it. It's expected to be 48, so a little bit better, right? We know that manufacturing and services are both kind of funky, right? Manufacturing is right at 50. It's kind of like, it could go either direction. It could be expanding or contracting. And if it does come in as contracting, I don't think anybody's actually going to be surprised because all the data has just been so horrible, right? But again, could we go manufacturing? Could manufacturing actually go under 50 to show a contraction? It could, right? It could. But again, the spender, the buyer is kind of the big deal. Now, interesting article if you guys are looking at it, and right here is kind of what it is, and it's an article and it talks about it's not like a release from the Fed or something, but it talks about it might take a recession to slow the consumer down. Right now, one of the things it talks about is during the pandemic we saw savings rise and credit card debt plummeted, and the reason why is because we had stimulus packages and things like that. People are basically getting paid to stay home. Obviously, you couldn't go out and, a lot of the things that people spend money on, i.e. like going out to bars and restaurants and vacations and things like that. If you're not spending the money there, and again, if you do a budget, it's kind of like, well, what can we cut out of our budget to save money? Well, all the things that typically waste the money that you have, you couldn't do during the pandemic. And they were giving a stimulus on top of it. So if you didn't lose your job, and you were getting stimulus checks and things like that, you were able to actually save more. And that's what we saw. Savings skyrocketed, credit card debt plummeted. Now we're seeing the exact opposite, right? People are jacking up those credit cards again, and the savings are dwindling again because we can go out, we can spend beyond our means again. And that's just, hey, that's the American way, right? I believe it's one of the amendments that we are supposed to spend beyond our means, right? Not really, right? I'm not, that naive, but you guys know what I mean, right? That's the American way. Let's spend beyond our means, right? And again, gas prices are still high. They are not $7 high, right? For most people, right? But they are still high. So where we go with this now, it's very kind of interesting. All the signs are in one direction, but yet for some reason the market just believes that like, that's it. The Fed's going to hold it right here. We're good, right? We're good. There's not going to be any recession. Recessions are, a thing of the past, right? Low rates are here forever, right? And again, I think they're, everybody accused low rates of forever, but come on, it's 9:45. I know you got the data. Give it to me. Give it to me in all its glory. Come on. Look at this. They're playing with my emotions on a Wednesday. Oh, there we go. Bam. There we go. Both under. So, yeah. So not only is it breaking below that 50, but it's like, ooh, right? Here's all the manufacturing stuff. So, again, that shows a contraction, which, I don't think anybody was doubting. And the question is, if we do go into a recession, which again is not bad, right? Recessions are not a horrible thing. Like recession is such a dirty word, but it's not necessarily bad, right? It's like the same idea with like a forest fire, right? You think forest fire, and the only thing you think about is this is so negative, right? A forest needs a forest fire to get rid of all the undergrowth and all the bad stuff there, right? A recession is the same way, right? It gets rid of a lot of the things that shouldn't be around, shouldn't exist to make us more streamlined, right? It's like a step backwards to go 2 steps forward. It's not necessarily bad, right? Yet it has such like a negative thing. It's like, oh, how could you say that? People will lose their jobs. It's like, well, maybe some of those people shouldn't have those jobs in the first place, right? Maybe, right? Bad companies making bad things. Maybe we don't need that. So this is showing us pretty wholeheartedly that it wasn't as good as what we thought. And last time they were saying, hey, listen, they were better than we've reported. So, overall, you have to look at this and this is one of those ones, the previous doesn't matter as much. I think this is pretty telling, right? We are negative, and there's no, it's contraction, right? The data is showing us it is contraction phase now. So, yeah. It's going to be interesting. There's some trade setups that occurred ahead of time. I wonder if that's going to affect them at this point. So, interesting. All right, we'll see what home sales looks like. New home sales expected to be down again, and consumer sentiment also being negative. Now, 55 is not horrible, right? That's not a horrible number, but again, going in a negative direction. What's interesting is the consumer sentiment and the spending, because again, durable goods, right? People still spending the heck out of that kind of stuff, right? When you see that spending going in there, and again, it's not retail sales, it's durable goods. It's a little bit different. But people still spending high. So we'll see what that consumer sentiment number looks like. I'm very curious to see how that data comes in. All right. And then the big thing today is obviously 2 o'clock. We're going to get these FOMC meeting notes, and then Macklin speaking at the end of the day. So obviously, no, this is a detailed record of the FOMC's most recent meeting. It provides in-depth insights into the economic and financial conditions that influence their vote on where they set rates. So you can see 7 hours ago, dollar hold firms on edge of minute notes. So I don't think they're really necessarily changing course much. I'm very curious to see if they're going to back down. And again, everybody feels like the 7.5 is like normal now. It's like, oh, 7.5, that's weakness. Nah, 7.5 is pretty strong, right? 5.0 would be considered more kind of in that range. I'm wondering, question is, are they going to unseat really the markets? Are they going to say anything that is super inflammatory right going into a holiday where, again, we're giving thanks, right? Or does it just kind of this statement just kind of fizzle out today? And I'm wondering, based off the movement right now, everything is dollar week, dollar week, dollar week, dollar week. If they reaffirm that they're going 50, 50, or even 50, 25, 25, that the end before they pause is going to be up in that, that 5 range. They've said that for such a long time, and everybody's saying that. Like, where's the weakness in that, raising the interest rates even further? So that could be definitely an interesting move there. And then that's it. Tomorrow, obviously, U.S. holiday. If you are going to be trading, obviously the European markets are still open. So there's still things you can trade tomorrow. They're obviously lower volume, but it doesn't mean there's not, good trading opportunity. As you guys know, again, when it's football time here, not everybody likes football. American football, right? Not soccer. Right. Again, there are things that you guys can trade tomorrow. So again, the European markets will be open. There will be European data, as well as you can see New Zealand data. So definitely stuff you can trade, but you're going to pretty much do it in the currency market, and the volumes will be lower. You're not going to have the same type of manipulation. You'll have different players that can manipulate the market, of course, right? But there'll still be things that you can trade. So nothing really you really need to watch out for necessarily tomorrow. And then Friday morning, you can see there's nothing in there. Nothing in there. So I would say that today thus far is kind of one of those things where good is bad and bad is good, right? You look at the unemployment, you're like, oh, that's bad. Fed's slowing down. That should be good for the markets. You're like, wait a second, more people unemployed, that's good? Again, it's the interest rates people are worried about. But at the same time, you see the core durable goods orders, and you're like, whoa, the Fed is not going to slow down now, which is technically considered bad for the market. So, there's a lot in this. Again, you can read it, 10 ways to Sunday, and then again, on top of that, use some tea leaves and figure out exactly what's going on. But the reality is, in the environment we're in right now, low volume today because a lot of people are already out. The market's going to do things that are, a little bit more, irrational, and just be aware of that. Use caution with that one. But 2 o'clock, one way or the other, will be something that does move the markets, even though it's going to be a lower volume move, and not anything that, I don't know. I would say that it's not going to be our normal day, but that's why you're seeing things like this, where the dollar yen is now up 120. You're seeing a little bit more dollar weakness over here. 147 is a respectable day. Got to like that one in 24 hours. All right, let's go over VIX. So here's where we are at the VIX right now, right? The VIX continued to deteriorate yesterday as we expected. Again, there was no real main news. Will we see a little bit of a pop? Yeah, there's a little bit of a pop right now. Why? Well, again, we are going to an FOMC meeting note. They're going to talk about financial conditions and what's next. Does it need to go crazy today? Probably not, right? As I said, there's a lot of the big players are already out of the market, taking advantage of 3-day holidays. It is what it is, right? It's just be prepared for it, right? It's going to be lower volume. The dollar. So there's the dollar weakness. You're like, wait a second, why is the dollar going down? Well, again, people are forcing that dollar down. They're seeing that, that unemployment number. It's like it's working. The Fed's really concerned about employment. Employment's going up. Yeah, that's what they want. They're going to slow down. People are still spending, right? It's not necessarily hurting. Typically, again, people will stop spending when they're very, very concerned. And again, that consumer sentiment, may give us a little bit more insight into it. But right now, again, dollar is on the weak trend right now. So again, technically, if the market is taking this as a dollar week based trade, that's good for the overall indices, and all the indices are up right now. They were almost flat, but now they are all up. Okay, So again, knowing that we have dollar weakness. Now, we do have a lot of buyers down here in this 106 area. There's a bunch of little small areas here where people could be stepping in. The problem is a lot of the big businesses are, the big companies are technically out of the markets today. Obviously, there's computers, algorithms, all that kind of stuff that is trading the market and stuff. But overall, a lot harder to get a kind of a fat finger type trade today, with it being obviously somewhat of a holiday type day today. All right. Oops, hold on. There we go. Sorry. All right. You can see commodities for the most part. Oil down big, and again, it bounced off an amazing level we mentioned yesterday. Natural gas, you're looking at natural gas over here up 10. You're like, holy crap, 10%? What is going on with natural gas? And there actually was a headline, I forgot to point it out. We talked yesterday about the, where is it? Oh, look at this. COVID may have passed the point of, or China has passed the point of no return on its COVID infection. Oh, that could be bad. Without reverting to harsh lockdowns. And we'll see. If it gets too bad, they'll claim for it. Right here. Here we go. This is why you are seeing natural gas do what it's doing, right? The gas price, they're saying that this is what we're going to cap it at this. And a lot of people are like, yeah, we're not really happy. That's much higher than expected. Again, leading to obviously some buying pressure inside of natural gas being up 10%. So higher than what a lot of people expected. But I think they're okay. I think this is okay. I think they're in a realization that they can put whatever cap they want, but eventually there still has to be the other side of it. Like it's a two-side equation. They can cap it, but they can only cap so much. And because of that, I think it's because they're such a surprise. I think that's why we got a 10% move today. Now, is that 10% move permanent? Will we stay there forever? I think there's probably a little bit of a kind of a double-edged sword here. This is probably because of the lower volume today. But I think that's probably adding to it. But that's why we're seeing, not that. That's why we're seeing something like a 10.3% move or 10.28% move in natural gas. When you're seeing, the other energy out there dropping 3.62%. So, yeah, but it's a big one. It's a big one. All right, let's go over across. So, as you can see, we talked about a position here. It went almost down there. It got stopped out. Kind of formed a new level. But you guys know the rules. After 4 hits, you have 1, 2, and then really 3 and 4 right here. Right? If you count just 1, 2, and 3, there's your hit number 4. It held, and then bam, it broke through. Now, it did set up an interesting trade. So, we'll remove it. That was kind of a pip-up-based trade yesterday. It didn't really pull back, but early morning today, if you look at a base down, there's a couple of them. This one's tested here. If you're looking at something along those lines, you can see that at 6 o'clock this morning, there was an area to take off on. I'm a little bit surprised. This area right here, I love the way that was drawn. It was a 50%, and it didn't even slow it down. And it just goes to show you there are a lot of people out of the markets right now, and that's kind of why we're blowing through levels like they don't even exist right now. And again, remember, levels are not a guaranteed reversal area. They just have a higher probability of turning. And it may turn just a little bit higher. Remember, a lot of people use the 50 and 61 as kind of their stop loss area. And it is now turning inside of that zone. But you can see, for the most part, Europeans kind of sent this market straight down. And then, here, I'll draw it for you real quick. Here's the European Open. There's your 530 reversal. Right? So, kind of, I don't want to say planned, but not an uncommon formation that we're seeing. So, right now, we are at a pop, and if you look to the left, we don't have any sellers here until just a little bit higher up at the 61.8 level. We didn't quite get up there, and again, we may see another push forward. Really, we were saying that, we didn't really, this is not our favorite zone up top, the way that it was formed. I did like the formation here, but like I said, it was kind of front run. I wouldn't really quite say it was front run from this one, but as you can see, we ended up slicing through it just now. The big question is, again, this is such dollar weakness right now, can we get an inflammatory statement to get a short in here? I think that the probability of that is probably pretty high from now till then, but I'd really like to see some type of a topping candle so I can put a level of risk in. I don't have a level of risk right now because it's not really, it hasn't really kind of peaked, right? We haven't seen like a true top of it. So I like it, but I like it, but it's like, I think we're just a little bit off. Um, hmm. 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 Yeah. I'd like to find a top. I'd like to get this one short. If you're going to get it short, I think you need to make sure you get profit right here, or right there. And that'll be before this. And actually, this would be a green black. 66, I'm sorry, 66.52. Okay. And again, all that is a parabolic retracement move back down to the origin of the move. That's all it is. So nothing super fancy in that one. Aussie yen. So Aussie yen, we kind of had a really choppy top in this one. And again, 1, 2, 3. We're not interested in taking shorts out of it. It did short, and it did actually put a new little level in. You could say, hey, listen, there's a decent top, and we had a failure to go up, right? We hit it here, and that's where we continue down again. So there was another trade base there, and again, it's the 61.8. We knew that was going to have some artificial selling coming in. So it did. The seller, I don't even say artificial, but the sellers did come in at that level. And look, we had a test here. So we knew it was something that was, had a potential for that. And again, European market open right there. We watched it come down, and then 4 o'clock came back up, and then 5 o'clock continued to push it lower. So right now, we'll run this one all the way up. I think right now we got only about 15 more pips. I think somewhere between this 50 and 61. If you look at the candles right here, we have a basing going higher, right? Typically, when you see that, that's something like it's kind of like a telltale sign like, hey, listen, there was buyers in here. I think there's probably a level sitting right here. And could this be a potential bounce? Sure, it could be. Again, it is kind of a proxy. It's kind of two proxies, right? It's a proxy for gold and it's a proxy for the Dow. So there are kind of two levels in here. This one I would say has the potential for a news spike. Right there. Question is, can we hold at this level? Because right now, this is purely yen, right? This is purely yen. Yeah, see, it's already starting to put the top down here. So it's not an Aussie-based move. It is a yen-based move. That's kind of what we're dealing with, right? Got a level here, backstop by the 61.8, and then we have a level here, a drop at base, again, coming off this level with a huge push off of it. I think it depends. This one depends on how aggressive you wanted to be, but if we can be down there for news, I think it's something along those lines, right? And what it would be is it's kind of a reversal, right? It would kind of be a reversal in the end play. If we can get down there. So again, it's an if this then that. I'll put a price tag on it. Oops. Just so you guys know where the 61.8 is. We're talking about approximately 93.55, if that makes sense. And the reality is you could technically trade this one tomorrow too. This could be a trade. If we don't get down there today, say we just mess around and we're literally bouncing back and forth and there's nothing big right here. Going to tomorrow, again, you won't have the U.S. influence tomorrow. I think there could be a case made that this is our top and bottom for tomorrow if we haven't burst through this with FOMC. This could be the new channel for the next 2 days as we just kind of bounce back and forth at 94.07 and 93.55. It's not bad. But like I said, level on top of a level. The more conservative one is the better of the two, but we obviously shown that there are some buyers right here. All right, euro dollar. So euro dollar, obviously, again, here's we just drew this. We drew it with the Aussie dollar. European Open. 5:30 candle is the green bottom, right there. Okay. And again, actually, it wasn't a bad little trade there. This 23.6, we talked about that yesterday. It kind of took a base here, and that's like, yeah, it's going to break. A couple push throughs. So you didn't need this one. Question is now, we are actually at the 61 right now. There is a level sitting right there. It did break through the top a little bit, though. Let's pull that back to there. To there. This definitely could be a reversal spot. How much is that spike? It's a 50 pip spike. I kind of like the top right now on it. Well, it's moving on me. We'll see. I'll wait in 15 minutes. I'll check it in 15. Yeah, with the spike up right now, I definitely think this is I'd say kind of more. I kind of feel like it's. I don't want to say primed, but I think it's kind of set up right now where it's looking for a bit of a reversal. Yeah, I mean, if you think about it, we had a parabolic spike off that, off the open, right? We are starting to hit tops. We have two lower highs in there. We are at a level of 61.8, which is going to be big. If you take high to low right here, we do have an area right here, again, of supply that we've had in the past. And again, a nice push up. Since 5:30, it's been nothing but straight up. Do we reverse down in preparation for what FOMC says? Or is there not going to be enough volume is the big question that I have. So interesting kind of setup on this one. Would not be surprised if this is the peak for the day, or at least until FOMC comes in. And like I said, I don't think FOMC is going to mess this one up. I don't think they're going to say anything super inflammatory. Yeah, I don't think it's going to be like an insane, like horrible trade today. But yeah, that's an interesting play. All right, yeah, so not bad. Let's see. So euro pound. We talked about this straight down. Here's the Harry Potter we drew from yesterday. There. I mean, it's done. You're out. Anybody that's on the channel, it's like, I don't know what the heck a Harry Potter trade is. Well, Harry Potter is this pattern, right? We go through a level that's violated. We do a little bit of basing, right? Because again, we want it to not just be like a quick spike in and out, right? A spike in and out like this doesn't tell me it's an entry. We're looking for down, and it even can be like this. We're looking for a base, and we're looking for a pullback. And then we're looking for an entry. Well, there's your drop. There's your base. There's the green candle pullback, and there's your finish trade. So little small 25 pip one, but we mentioned it yesterday. As you can see, we talked about this. And this was actually 3 o'clock in the morning. We mentioned that, hey, listen, this is backstop by the 50. So had you taken the short from the open, we knew that we had news this morning, and we said, hey, listen, we expect pound strength to come in because of the French data. There's the French data. So the French weakness. So had you watched yesterday's session, this is absolutely what we had talked about, literally to the T. Not only did we take the upper level because of the news, we also got the Harry Potter down here. So you could have rode this whole thing, I guess, right? You could have, 77 pips to the downside. But again, all this was set up yesterday. Again, where it is right now, I don't think I want to see a new bottom. We're approaching the 78.6 here. We're right on it right now, so we can technically delete this. We talked about profit taking occurring right here, and that's what we're running into. But we got a bunch of chop in here. The next level that we've seen, and again, it's hit it a few times right now. I'm going to put a horizontal line on this one. I think there's going to be some problems in there. It is not fresh, but we're going to stick it right there. I think we probably have a little bit of a hiccup right around this 86 level flat. And again, I talked to you guys yesterday about 86 and what it does. I think 85.76 is probably more where we see it. Again, this market's about to close. And then again, with the holiday, this one's the volume is really going to dry up. When their day is closed, there's not the US kind of overhang on there. So there's not going to be as many people trading it. So just be aware of that. But yeah, nice setup. If you follow this one, two different trades in the overnight from this one. So I like that one. But still, I'm still bearish this position. I think it has room to run. Euro. So there we go. We talked about this one. We talked about, here's the 146.10. Right there. There's your news. So we've been talking about 146.10 for a little while. Right. And again, 1, 2, 3. We're not interested anymore. Came back up, hit it, and actually it Harry Pottered it, kind of an extreme range, and came back and touched it right here at 7 o'clock. So, you had multiple options to get in. Let's see. Right now, our trade is out. Let's take these ones that are out just to kind of clean it up going forward. I don't need that one anymore. So, I think that this one probably also has a bit of a reversal potential later on today. It would be a yen-based play. Problem with this one is it would be weak yen versus weak euro, right? We don't really want to do the weak week. We like to do a strong week. I hate to say that this was a great one, but I like the other one much better. So we are at an area, obviously, where there's probable reversals. We're at a 50% retracement from the last low to high. It went off the exact levels that we mentioned yesterday. Right now, I think you need to watch out for it. I mean, obviously, there's a one candle bottom right here. Backstop by the 61.8. We're kind of running into the buyers right here. So even if it does come down, maybe if we reverse right now and try to push down, this one becomes a news proxy, but I think there's better options out there. I'm not as really interested in this one with taking this one long because, again, it's not your strength creeping back in. That would be yen weakness pulling into the market. So just be cautious with that one. I think this one is a casualty of the U.S. market not being, open, right? Because of holidays and stuff like that. So pound dollar, again, not surprised at all. You can see, look at this. It kind of got front run on this level. And again, 1, 2, 3. There's your fourth hit of it, pushed down again. And then when it came up and hit it, it dropped down again. It's like, yeah, we're not taking this zone, right? It's being pushed again and again and again. It's hit over 3 times. We're not interested. And it went higher. So not surprising that it spiked. It actually ran into the same sellers that originally caused this move. So let's see. Let's extend some of these things. So technically that's up. We're going to remove it. We're only going to care about this one right now. Let's pull this up to a 4-hour and see what we have over here. I'm going to use a horizontal line to get a better reading. Looks like we do have a zone here. Let's see if it looks better on a 2-hour. Not really. I got to use it on a 2, but I don't like it. So let's push that across. This one was front run. Pull that off. By the way, that other one over here was what this was. Pull that one off now. This trade is done. Yeah, I'll pull it. Yeah, it's fine. So I'd say this one has a little bit more room to run, right? Just a little bit more room to run before we have a level coming in. If we can get another push forward, I think 102.65, or here, I'll put it red. 102.65 could be a decent little short. With it pushing up, though, I mean, this is one of those cases that it's been strong. It's been strong week is what this one is. With all this weak dollar coming in, I think if they reaffirm that they need to go farther and then they're going to hold it past, and they say everything in one letter that, I think if the market is surprised by what the Fed says today and we see dollar strength roll back in, as my personal opinion is it should, what they say should be strong because inflation is not where we want it. Prices are still high. Yes, the year over year kind of, went down, but the monthly, it's still continuing to rise. It's not slowing down yet. It's just that we had monstrous moves last year and we're not having monstrous moves this year. That's the only difference between the two. So I think they should come out with a monstrous statement and bring dollar strength back in today. I think that makes the most sense. It's kind of setting up for that right now, but it's got to move a little bit more. I'm kind of hoping that it doesn't retrace fully before the FOMC meeting notes come out. So, yeah, I'd like the short. I think 120.65 is a good place to take this one. Pound yen, you're already seeing starting to move. Look at this, right? We were talking about an up. It didn't go down. It just kind of maintained here, and then it did. It gave us the burst. We got the burst. We just didn't get the pullback on there. But yeah, we called the direction correct. We just didn't have it come down to where we needed to play it to. So that's what we're dealing with now. there's a test on that one. I hate this. We basically were here at 9:30, and then 9:30 to 3 o'clock this morning, like zero movement, right? No movement in this one at all. It's like, oh god, draw me an ugly pound yen chart, and that's it. Yeah. So you're seeing yen strength, a little bit yen strength, but again, it was fighting over here. I think this is one of those ones that you leave alone for today, and here's why. Yes, the yen is winning right now, but the pound is not slowing down with its strength, and you're seeing the pound now is starting to win. If the yen does reverse again, the pound market's getting ready to close, so it should maintain its its strength, not necessarily movement, but it should maintain its strength at this point. If we do get that reversal, where again we're starting to see massive amounts of yen weakness come in, which I think is entirely possible. I think this one shoots higher, right? This one will go in the opposite direction of the other two, right? The other two will go up, but they're so much farther down. I think those are better opportunities. I think this one, again, I think it's already pretty high, and I think it has the ability to go higher. So try to pick a top on this one right now. I'm not interested in, because if you look where the top is, in this last draw, you already had one hit here. You already had one hit here, and if you bring it across, we hit it again. So it's been hit 3 times. With it hit 3 times at this point, I think you got to be thinking, hey, listen, I don't think those sellers are stepping in to save this puppy again. I think we push higher. So I think this one gets up to 170 by the weekend, just based off of what we're seeing. Dollar CAD. Look at this, right up, right down. We missed the bottom yesterday by a little bit. Late last night, actually. It came down, it did grab the 50, and then we got the confirmation over here as it went higher. It turned where it should have. Actually, this is a decent top, right? It turned exactly where it should have. And again, that was at the 8:30 news time today, which kind of makes sense, right? People took that as very weak news for the dollar. But what are we doing right now? We're rallying back up again. So we're kind of in the middle of the range. This one is also hard because, again, we have such influence right now because of oil. We obviously know that oil kind of bounce off a great level, and then, it's kind of jacking this one all over the place. So dollar CAD wise, the fact that we've touched 3 times low now, I think is important. We can adjust this down. And again, right at the 50 here, right? That was something to hit last night. We've hit it again. This is kind of hit the next time it comes down. Like we've hit here once, and we've hit it again, and we've hit it again, and it's had good responses. But every time we hit this, it eats a little bit more out of it. So, I don't know that it holds. I think we go down to the 61.8 on the next one. That 61.8 level is at down here. I think we come down to 133.29 next time. Because as I said, 2 shallow hits, but next time we kind of blast through, we may not have any influence at all from the dollar in that one. So I think it probably comes back down. So not necessarily surprised right now. And again, oil is like just deteriorating. It's down 4% right now, right? So yeah, you got some dollar weakness, and now as the dollar stabilizes, you're seeing oil continue to get worse. So, yeah. Dollar Swiss. Again, no surprise. This one, we pulled down. You can see that it did go past the 23. It kind of cut through. It came back up and cut through. The zone that we'd picked, again, 1, 2, 3, 4. We're like, oh, God, we don't want to take this long. And it didn't. It didn't hold. It just continued to deteriorate and collapse. It went down and grabbed where it should have. Obviously, here's where profit target should be taken. Right there. Oh, look at that. I was so close. Right there. Identical numbers. Boom. So that's where the bottom should be. Again, massive amounts of dollar weakness. And again, this is kind of funny. European session started here, and then they reversed it, and they just slammed this one. 5 o'clock is right there. This is a lot of weakness pretty fast. We can run this down. I think, again, if that FOMC notes comes in strong, this one is set up perfectly for a reversal, and it's kind of like a parabolic move. So yeah, Ideally, I'd like it to put a true bottom in on a 30-minute. We don't have the true bottom yet, but I think this one, the way this one is set up, with all this massive weakness ahead of the statement, I think it's ready for a reversal. And we could potentially move those 50 pips back up to 95 today, if that statement is what I feel like it should be. Okay. Going to dollar yen. Again, there we go. We talked about 140.75 being kind of that reversal level. Yesterday we were standing right here. And what did we do? Nothing. Kind of went down, kind of came back up, grabbed that level again. Actually, the level would have been adjusted to there. And you can see we hit it, and then just boom, deterioration. So here's the other side of that trade. I got front run a little bit, but we were saying, hey, listen, if we could be down here, it'd be a long. We went a little bit past, but we talked about 140.27. It had been down there for a while, so it was more of a target than anything else. And that's exactly what it did. I would say today, again, we've mentioned this in the past, the dollar US is a little bit harder to play because it has the dollar as well as the proxy both in there. My opinion on this one is I think this one has the ability to go back up again. I think we can get to like 141.60, or maybe a little bit more conservative on that one. Maybe bring it down into this level right here, because we did have a little bit of a kind of a pullback test. But I think this one has the potential to reverse this and come right back up to that level. If you are looking for a dollar yen trade, but I think it's a little bit riskier. Again, dollar weakness. So what are you seeing? Again, we're not telling people to trade cryptos. We just look at them because it's technically a fun chart to look at. Again, they're up because dollar is weak, but we're at levels where you need to be cautious. Ethereum, again, looks exactly the same. We're actually at an old violated level right here. And Dogecoin, again, super ugly with all kinds of movement. Weak dollar, again, you were seeing this one go higher. You can see that there was a pull up there. It actually crossed through the gap yesterday, which I think is pretty good. I'd like to see how much this raises. Again, I feel like bonds people are. I think it's kind of a risky trade. The more this one climbs, I think it's definitely riskier because they are going to raise interest rates. They've made no qualms about it that they are raising them, which when they do, it will decrease the value very, very quickly. And again, it's kind of like, are they thinking long term? Right? I don't know. I still feel like the market is. I don't know. I feel like the market is very like, oh, they're not going to raise interest rates anymore. It's like, I think they are. They've said it. I'd be very shocked if they didn't, because again, the inflation data is increasing on a monthly basis. So, yeah. All right. So let's go over and let's look at this one. How about that trade? All right. We talked about 81.90. We came up and we got a new top yesterday at 12. Not only was it a great reversal yesterday at 12 because we had gone through there, it has not been stopped out on the top side, but we also started the European market and 530 reversal. Whoops. 530 is that candle right there, and there's your European market open at 3 o'clock. Okay. So, and we also talked about shorts coming through this level. Now, I hate to say it, it didn't get a trigger. It did go down, it did base, and it did pull back, but it didn't grab the basing level. But we talked about a short going through this 23 level, retracing all the way back down. And we mentioned the profit target really should be taken here, but we were going to use the old violated level because we assumed that was going to be a problem at 76.78. Is it 78? 76.80 is fine, right? That's where we mentioned that we see this coming down to. I still think that probably holds firm. And again, FOMC can screw this up a little bit more. Lower demand, but again, gotta love that 81.90 level. What a great trade. What a great trade to the downside. So, yeah. If you're short, you're short. Natural gas. All right, so natural gas. Funny enough, it did break through. It came back down, based in there. It's like, yeah, it's going higher. So we got to extend this up. Got to extend this up. So right now, I think there are some interesting levels in this one. We can use this. This is an old level at this point. Let's pull some of these off. We're going to move it here. We're going to try bring this across. We're going to box this zone out right there. Pull that off. Go green with this one. So I would say the top is probably in. The news is out, right? The data's out there. do we get much more from this? I'd say no. I would say that, again, 10% is well outside of the range of what normal is. So it's definitely a parabolic move in the upward direction. Problem with this one is going to be that this is going to be predominantly a European-based move. I would look for a reversal in this one. It's not a bad zone. Yeah, I'm going to say these would be my two downward side targets right now in this one. That 23.6 level, there is definitely buyers at the 23.6 level. Are they the greatest buyers in the world? Like, is that an area where I'm like, oh yeah, this is good? No, I'm not super excited about it, but I do think there will be a little bit of a hiccup off of that one. Yeah, it's a level, but I'm not super confident in that one. Hold one sec. Sorry, my uncle was calling me. He's leaving New Jersey, coming down. So I was just like, I'll call you back in 5 minutes. I'll be done. He's got something to say. Anyway, so yes, I do think this one rolls back down again. If you are going to get short, look for 698 and 664 as the two potential downside targets. Gold, how about that for spikiness, right? Oh my God, what do we do? So again, we've talked about this level. It really hasn't moved much. You can see it's up 0.09, not really doing a whole lot. It is going more towards the high side. And again, I do think that they are going to mention, what we would say is, consider dollar strength. So, yeah, I mean, right now there's already been tons of movement. I think this one it's probably more short, right, than anything else. Again, we'll see what happens in the next couple of hours. But again, we are high right on that note. I think, again, profit targets of 17.23, 17.12 to the downside. Again, we've talked about this level. We could refine it a little bit if we want now. We can actually bring it up to kind of that level, right? There's your base. There's your touch. There's your touch. There's your touch. So, again, if you're trying to get some risk in this one, it's good. If you know how to trade this one inside of the options market, I also think that's a great way to trade this one. Because even after today, I do think we will probably see some, continued, push to the downside. So, I do like this one short still. Nothing's changed. Silver, there we go. We said, hey, listen, if it grinds back up into that level at 24.50-ish level, that's what we're looking for. It's doing that. Hopefully this is not an early move, and we're going to see the reversal come sooner. Again, don't want the move to happen before we actually get into when our actual trade is. So, yeah, we're there. Yeah, we kind of drew it right to the peak. So, yeah, it's going. As far as opening print goes, there you go. And this is also why I was a little bit late today. There's your opening print. Came right in at 9:30. We had a little bit of a base come in at 8:45. We pulled back up. We spent from 9 to 9:30, pushing right back down again. And there you go. 1 to 3, you were out. It actually didn't take us out till 9:45. We're in the middle of the session. So there we go. 1 for 1, right? And again, nice little pullback. Assume this would go higher today. There is your NQ move. And again, you guys can see it. I'm clicking them. There was our base. There was our confirmation. I'll pull it back a little bit to right there. There was our confirmation touch of it. So again, either one works. There was our 8:45, and then boom, our takeoff just a little bit early. Again, kind of the same thing. We were long. We're obviously well past. It's exploding. It's like 1 to 9 right now. 1 to 9.97. So I mean, it's well beyond the 1 to 3. So easy opening print. YM. All right. There's your YM based trade. Okay, there was your original start of it, came in. We were looking at it as an area where it took off of. There is your, and again, 8:45, there's your move. You could have also said that, hey, listen, I'm going to draw the box off of this, right? You could have done either one. It doesn't matter either way. Here, I'll put this on here because somebody will say, well, wait a second, was that one on too? Yes, that was one also. Doesn't matter which box you use. There is your 1 to 3 right there. So either one of those two was good, right? 3 for 3 this morning, right? And then there's Russell. Russell had the done screwed up. Now, Russell, if you had taken a Harry Potter trade on this one, Yes, this is an extreme version of it. It did break that old level. And again, 1, 2, and 3. 4 broke through. It based. It did pull back. Not as interested with this one. This one I did not set. But you could have done the same thing. The 845 set. There was your piece. Now, it did leave and then did push back down. So, yes, could you have traded this one if you were very aggressive and you're very comfortable with trading the Russell? Absolutely, 100%. I didn't place the trade. That's why the chart was not done ahead of time, right? But it did pull back, and again, the 1 to 3 is also finished at this point. And again, this is what it looks like trading in that that very fine that small time frame. 1 to 3 is right there, so you can see it's ticked past it 3 times. So more than enough opportunity in this one. But overall, could you have absolutely traded all 4 of these at the opening? Absolutely, all 4 of them were. I put 3. 3 were drawn before we started today's session, and all 3 of them went to full profit target. So had you taken the 4th, you were 4 for 4 on entries, 4 for 4 on exits. Had you taken the 3 for 4 for entries, you were 3 for 3 on your profit targets today. So another one of those days where opening print just absolutely crushed it. And again, that's how important it is to be able to understand how to trade those. And again, course is done. I told you guys already that I'm putting the extra kind of stuff into it. Because like I said, this is one of those courses, the reversal course. This one will be one that's going to be put into a webinar format, and ideally will be put into kind of like a forever format where I'm not giving the live presentation. It'll be like a recorded, check this out. This is what it is. Here's the results and data for it. Take it or leave it. It's, if you want it, great. If not, no harm, no foul. Enjoy your next trading strategy. So that's how it's being designed right now, and that's why it has not been released yet. But that's why this is happening the way that it's happening. So, all right. With that said, guys, that's it for today. We're ending a minute early, which is totally okay. Let's go ahead and do our drawing. So Jeff won yesterday. Right, Jeff won yesterday. And so he'll be going for 100. Everybody else will be going for 25. There's no turkey bonus today. Ernest, you're here today. Ernest, you weren't here yesterday, and I was like, Ernest has got to be up to his butt in like 30 turkeys that he's cooking. Ernest, how many turkeys are you cooking this year? Because I know you always, are cooking for groups and that kind of stuff. I was like, my bet's like 20. I'm like, I feel like you did like 30 turkeys last year or something like that for some group or whatever. I felt like you were doing a big catering thing this year too. That's why you weren't here yesterday. I was almost convinced. I was like, he's smoking like 1 million turkeys today. So as Ernest is listening, because he does have a delay, we'll go ahead and do the drawing. Okay. Winner of today's drawing is... All right, it's rigged. I'm telling you, it's rigged. I mentioned somebody's name and like they win. I swear to God. I don't have Surrey anywhere close. I don't believe in Surrey. Alexa's in the other room, but actually Alexa's in the basement. I don't think Alexa can hear anything that I'm talking about, but I'm telling you, he was supposed to bet himself, but I'm telling you, it's weird. I'm telling you, it's so weird. I mentioned somebody's name I talk about. I'm like, their chance of winning goes up. Like, I feel like we're going to have to start saying statistics about this one, right? It's a little crazy. So, all right. Marking that is complete. Let's give my man, where is he at? Let's go give him his 25 pip chips. Maybe he's out smoking again. He's not telling us how many turkeys he's making. But like I said, he's a very charitable gentleman. He loves anything that can be cooked on a grill, over a pit. He's doing it, especially when he can give back to other people. So I wouldn't be surprised if that's where he is at again today. But at least he got in here for a bit to catch some of the session. So with that said, we are not on tomorrow or Friday. Both those days we are going to be off. We will be back on Monday morning. This Sunday night, there actually will probably be some decent gaps because, again, U.S. companies and things like that will be coming back online. So happy Thanksgiving to everybody out there. And again, I'm so thankful for you guys watching these sessions. They are a blast to do. That's why I love doing it. Hopefully you guys join us again next week. If you guys are new here, welcome. And for my regulars, again, awesome seeing you guys. I appreciate you guys so much. And like I said, no names. It's going to be the new rule. It's going to be the new rule. I'm not going to mention any names. It's going to be like Voldemort and Harry Potter, right? We're going to continue with that trend. So, all right, I'm out of here, guys. You take care. Eat lots of turkey. Eat lots of pies. Again, remember, it's winter time. It's bulking season. So, again, don't let me be the only one that pushes my body to new limits. So, you guys take care. I'll catch you on Monday. Take care. people will do TikTok. That's what